Good day, fellow deal makers. Welcome to the Deal Scout. On this show, we're going to talk about deals. Surprised, right? What I do is I go out and I look for all like these really cool deal makers with, in this case, a guy with really awesome hair drinking coffee. And I look for people who have done a lot of deals and I go, teach us. We want to learn from you. So on this episode, we're going to have a conversation with a guy who's done 1,500 angel investments and he does a bunch of other cool stuff. But we can have a lot to learn from a guy who does that. So, Mike, welcome to the show.
Hey, thanks for having me. It was a lot of fun. It's actually 2,200 investments, but those are 1,500 unique companies. But when you include the follow-ons, I'm a bit of a lunatic. Basically, if you took the Faces of Meth commercials that they show to scare the kids out of doing meth, if you use Faces of Angel Investing, this is what you would not want to do here. This would be the junkie, the complete degenerate. That's what I'd be. So I've embraced it.
Yeah, Faces of Angels. That's the thing where you could kind of like before and after, like here's before he invested in Google early stage, and here's what he looks like afterwards with his Lambo in the back, right? So with that, how did you get your start in investing? Because right now you're a junkie. So at some point you had your first hit of investing. What did that look like?
So in 2015, I started really wanting to invest in private companies, but I also didn't want to lose all my money. So the best way to do that was on later stage secondary offerings. So my first investment was in Lyft on the secondaries in 2015, and that kind of really kicked it off. Started the education. Everyone goes down a lot of the same route, right? With the Brad Feld, the Calcanis book, all of these kind of things, and venture hacks, and learning as much as you can. And then you realize there's so much to learn. It would take many lifetimes. So I started really on those secondary markets for a while. And I did pretty well in a robust IPO market. Between 10 to 20 months, you were hitting pretty good winners, right? Maybe they were only 3X's or 30X's, give or take, but you had some good ones. That whole Pinterest, Spotify, DraftKings, kind of Robinhood, that whole era was not a bad time. So then I met somebody in 2018, probably, I think, that basically I was showing what I was doing, and he said, if you really want to do this, you got to start looking at the early stage stuff. And I didn't want to lose all my money and blah blah blah. And then it's more so about the education, right? Really watching the signaling, and just obsessive with the education. So he really dialed up my deal flow as far as other groups and other places that weren't really the later stage stuff. And once I really embraced that and started with the early stage opportunities, I never went back to the late stage stuff. That was kind of it for that. And that's the only place to be, is the early stage stuff. So then I made a ton of investments, learning a ton along the way. And then I stopped to just focus on my company, which is Lightning Ventures. And we have a boutique small fund and a syndicate. Okay. And we just focus on a very narrow slice, which is Bitcoin startups. Okay. So that's not crypto. That's not Web3. That's not the other things. Those are just sort of Bitcoin only companies that surround and just build with onto or have Bitcoin in their business. So that's really what I'm focused on now. So all this stuff right now, the flying cars and gas stations in outer space and all those kind of things, I mean, they're still out there. I still get a lot of those deals, but I'm not active like I was before.
Yeah. At the time of this recording, 2023, we've seen Bitcoin. I remember a long time ago, someone was like, hey, we need to get in Bitcoin mining. This was probably 12 years ago. And I was like, nah, man, I don't even know what that is. And I ignored it. Now he has like 10 Ferraris or whatever. But like we've seen a lot of stuff go on in the last few years with Bitcoin going up and there was this like massive explosion. Where is the current market for like Bitcoin? What are we looking at? Educate me because I'm ignorant.
So you're not too late,
Okay.
um, because it's going to go up forever. That's the reality is Bitcoin is going up forever, indefinitely. So, people thought they were too late when it was $80. People thought they were too late when it was 300. They think they're too late at 3,500. They're going to think they're too late now at 23,000. They're going to think they're too late at 250,000. They're going to think they're too late at 1,000,000. And this cycle is just going to go, because Bitcoin is the most pristine collateral on the planet. Okay, it is the purest form of money. It is the hardest form of money, okay, that has ever existed. And I don't believe that there will be a better Bitcoin or another Bitcoin or some other thing that replaces it. Unlike tech investments, right? Usually the first there doesn't win. Netscape, MySpace, they don't win. Something comes along behind it. Bitcoin is different. Bitcoin is different. At least that's what we think, right? So a lot of people, they come around to Bitcoin. They think, oh, I'm going to find the next Bitcoin. Then they go into this world of other things, okay? And then they have a terrible experience. And then a year or two later, they come to the conclusion of, you know what? I just care about Bitcoin. That's all that I care about. So that's usually a cycle. If I can stop somebody from that whole journey, and just cut them off right there, that's great. But if not, I think everyone will come to that conclusion as more cards come out of the deck.
Yeah. So I'm going to ask you about, like, with the competition and even what the government has done, like having their own stuff. The US might launch it, Florida might have their own, Miami might have their own, and all these different things that are coming up when it comes to cryptocurrencies and such like that. So I'm going to ask you about that, but like, let's do a simple softball answer. Like, how'd you come up with Lightning Ventures? Like, where did that name originate? Why was that important to you?
Well, there's the base layer of Bitcoin, okay? And that is the on-chain transaction. Those are what we know, right? Bitcoin's slow. It takes 10 minutes. Every 10 minutes on average, a block is found. There's only so much very valuable block space. Okay, there's a block size. There's only so many transactions you can fit into a block. Okay, these are all the arguments of Bitcoin can't scale and it's never going to replace Visa and you're never going to be able to buy coffee with Bitcoin, which when the Lightning Network, okay, that's a layer 2 solution. Now, this is still Bitcoin. This is not something else, okay? But instead of settling on that base layer, okay, that on-chain transaction, okay, we have something that sits above it, right? So that let's just say that I have 1 Bitcoin, and I take that 1 Bitcoin and I put it into a Lightning, I put it on the Lightning Network, okay, and there are channels, okay, connected. Okay. And I have my 1 Bitcoin here on the Lightning Network. Now, if I want to pay you $50 for something, or I want to buy coffee or whatever, that transaction is instant. It's nearly free, and that scales globally. Okay. Without question. All right. So the future of Bitcoin is the Lightning Network. That's where everything's going. That's how we're going to get billions of people transacting daily, okay? And then you say, well, what about this main chain? What about this base layer? Well, eventually, when those funds come off of the Lightning Network, okay, that's one transaction. So I can send Bitcoin to you. You can pay for coffee. The coffee guy can do whatever, this guy and that guy. And then eventually somebody says they need to settle it, right? And that one transaction at the very end of all of our stuff, okay, basically gets put back on the blockchain, right? In that limited amount of space to kind of to basically as an off ramp off the highway. Okay, so it limits the amount of actual on-chain transactions that are going to occur with Bitcoin because it all happens in Lightning. So the future is Lightning for Bitcoin. That's what our focus is on. That's not solely what we do, right? We do other things. There are plenty of Bitcoin companies that are not Lightning companies. There's something called Liquid, which is a side chain of Bitcoin. It's a product by Blockstream. If you're not familiar with Blockstream, it's basically the equivalent of the Cisco systems for Bitcoin companies, right? They're a unicorn. They're a billion-dollar company. Adam Back, the CEO, was quoted in the white paper. Very very important in those early days, and everyone is a fan of Blockstream, at least every real Bitcoiner that I know. So there's all these other things going on in Bitcoin that these other chains that are claiming Bitcoin will do all those things, right? It takes a little bit longer for these things to really come into Bitcoin.
Yeah. So why did you choose the name Lightning? No, I'm just kidding. So so what I hear is in this process of Bitcoin, above Bitcoin sits this Lightning layer, and that is the opportunity for scale because billions of people could go. It's nearly cost effective and free and fast and all this stuff, and you see that is the opportunity for scale, like that layer right above. At least and that's the name of Lightning Ventures. Is that right?
Right. And we're getting into the Bitcoin a little deep here, but okay, so without the Lightning Network, okay, Bitcoin to scale would have been forced to do something called increasing the block size. So that every 10 minutes, that 1 meg, that 2 meg block every 10 minutes, they would have to hard fork that and make that really big. Okay, 100 megs, 200 megs, a gig, okay, every 10 minutes, right? Which is what some of these other chains do. But the point of Bitcoin is I can take a 20-year-old IBM ThinkPad, or I can get a $50 Raspberry Pi, and in a very short amount of time, I can download the Bitcoin Core client, the entire blockchain, and I can run my own node on a $50 computer anywhere in the world, which is the key to the decentralization. That's why Bitcoin is the only decentralized network. Now, as soon as we hard fork to a 1 gig block size, now we can't have the average person running their own node. Now we're relying on data centers. We're relying on AWS servers. We're relying on all these other things. And that is the point of Bitcoin. So some people say, oh, just raise the block size and raise the block. That's a terrible idea, right? And luckily, there was this big event in Bitcoin that happened around 2017. It's called the Block Size Wars. They've written books about it, where there was a certain camp of people who wanted to raise it and a certain camp of people who were more pure, which is it needs to be as small as possible so that somebody in the middle of nowhere with a $50 computer can participate and run the network, which is a key principle of that whole argument.
Got it. So I think, man, I would love to see like some form of master class or something like that that gets a little bit into the weeds of that. So I don't know if that exists or that you guys have that educational program. I know that you guys are pumped about education, but if you have something like that, let us know. Do you guys have something like that?
No, there are so many good resources on YouTube, but that's the problem, right? There's so many bad resources.
Yeah.
Those very first Andreas Antonopoulos videos are timeless. BTC Sessions, he's got a great YouTube channel where he goes through a lot of these things, but these are all recent things, right? This was years ago. But there are a lot of resources on there. The ironic part is if they had a master class, they'd probably get some idiot like Paul Krugman to teach it or something, and it would just be terrible. They're not going to get, Jimmy Song or Saifedean or one of these, true Bitcoiners to teach the master class. I wish they would, because it would be great to really explain it properly.
Copy that. So, all right. So to the government, right? Of what the whole thing about what you were saying with Bitcoin, the decentralization, right? And put the power in the hands of the $50 laptop user, but anybody can have access to this. The government is rolling out coins and this and that. Like, what are your thoughts on like that? Does that make the Bitcoin community nervous, or is that even a better opportunity? Like, what are your thoughts?
So government's rolling out, the government's adopting. Here's the thing. The core thing is this: Bitcoin cannot be stopped. It cannot be stopped by a government. That is the actual reality. Okay. Every government in the world could get together and they could try to stop Bitcoin. And I'm not sure if they've realized this, but they can't. Okay. There's a satellite, orbiting the Earth that has a copy of the blockchain up to date. Okay. We could transact with that through SMS messaging and other things, right? Like we don't even need the computers, okay, because there's a satellite with a copy of it, right? What happens if the internet goes down or we lose electricity? Well, first off, if those things happen, you got bigger problems. If we lose worldwide electricity, but so governments adopting it, whoever is first. I've been to El Salvador twice, 2 years in a row. They had the Adopting Bitcoin conference out there. I was there in person when they made the announcement in Miami on stage with President Bukele on adopting Bitcoin as legal tender and how that rolled out. And they are buying Bitcoin and it is working. Okay, it is working. Something like Costa Rica, for example, they spend $50 million a year on tourism, trying to get people to come to Costa Rica. El Salvador did the same thing. They just bought the same amount of Bitcoin. Okay. And now they're getting all of these people, these affluent people coming down there for sort of tourism. All right. And they're making it more friendly. All right. And they will lead. Right. So the Central Republic of Africa, there's other countries that are adopting it as legal tender. Okay. And that will be the way that it goes. They will not be adopting some other coin. Okay. They will not be adopting some other thing, right? They're going to adopt Bitcoin because that is really all that matters. Now, even if these governments aren't quick to adopt it, okay, Bitcoin's going to do great. Okay, Bitcoin's going to do great. It's not depending on the countries to adopt it, nor can the countries really stop it. They can just hinder it to their own demise. Like New York State wants to put all sorts of problems on mining. Okay, that is a terrible thing for New York to do because they could be leading. They could be on the forefront of it, and they're making it incredibly difficult, as opposed to Texas, which loves Bitcoin mining. And by the way, Bitcoin mining balances their grid and has all sorts of other positive effects on energy, right? There's this whole push on energy and Bitcoin uses all this energy. It's like a pimple of what the world uses for energy, and you could be on the forefront of that. You could lead it, or you could not, right? So, it would be best if everyone kind of got on board and started.
Super cool. Let's talk about suits, right? As I'm reading through your investment thesis and what you're trying to do to the world, there's the suits, and we'll call, like accredited investors or maybe institutional investors over here, or professional investors. But then there's non-suits, right? Like the people who are non-accredited and they're looking to maybe learn about this, get started. They don't have a lot of money. Maybe they got $100. What advice do you have for these non-suits over here? Maybe walking around in Miami with flip-flops and board shorts, and they want to start investing in Bitcoin.
Okay, well, the first thing is, it's 2023, so we're living in a different world. So the question is, do you identify as an accredited investor?
I do.
Because if you identify as an accredited investor, nobody can tell you. Now it's your body, it's your choice, and that's what it is. So, people, what does it mean to be an accredited investor? I mean, this is such a great scam, right? Because you can lose your life savings at a casino, okay, and that's completely fine. In fact, another business actually relies on you losing. Okay, their model is based on you losing, and anyone can do that. But if you want to invest in an early stage technology company, you have to be deemed sophisticated by the government. That's by design, because that's where the real wealth is made. That's where the real life-changing money is made, is by investing in these early stage companies. And they certainly don't want the average person doing that. So we've seen a lot of progress with the Jobs Act, okay, and the regulation, crowdfunding, the Reg A offerings. It's getting better. I only imagine it's only going to continue to get looser, okay, as far as companies being able to raise in that manner. It's great for them. It's great for Aunt Mary and Uncle Bob, who want to put a $200 investment on their credit card on one of these sites. Okay, that's all good. So what I would say to somebody is, first off, when you're going to make your first investment, whether you're accredited or not accredited or whatever the opportunity is, make sure you click the right button. because there's a button that says, "Are you accredited? Yes or no?" And if you click yes, you're likely able to make that investment without any issues. And if you click no, then you will not be able to participate. And if you happen to click yes and a couple of years go by and then you are accredited, this whole thing was just a dream anyways back then. Okay. Even the language that they use in the accredited, it's like, did you make $200,000 last year? And do you expect to make it this year? Well, with the power of positive thinking, I'm always expecting that I'm going to make it. Okay. I mean, what does that mean? Do you expect to make it? Right? Like how legal, how loose is this language?
Yeah.
So the danger for the unaccrediteds though is they get fired up on angel investing. They go on WeFunder. Okay. They're all pumped up and it's just littered with terrible deals. Okay. And then they're looking at a kombucha company in Ohio and it's like, oh, I'm in this. And then this guy's got electric motor scooters and I'm in that. And that's really not what you want to do. I think you want to look at all those deals. I think you want to look at valuations. I think you want to learn the differences in the notes. Is it a safe note? Is it a convertible debt? Is it a priced round? What do these things mean? How do they convert? I think you take the education, look at the deals, look at multiples. What's a multiple on a CPG company versus a tech company? You know what I mean? And then you just start looking at things, but I would not go on Republic and whatever. And it's a women's skincare thing. Oh, I'm in that for $300 and I'm in that is not a good idea in my mind. So I wouldn't do that if you're unaccredited, but I would wait for the sweet pitches because there are good deals on some of these crowdfunding platforms that are open to everyone. But you really have to wait for the right opportunities to show up. Just as an example, WeFunder did a thing. It might be the only good thing that WeFunder's ever done. That WeFunder did a thing where they had 40 YC companies. Okay, either past YC or current YCs, all live at one time on WeFunder. And there were a lot of names on there that I had already invested in that I knew. They were great opportunities because there's no carried interest on those WeFunder deals. At least I'm almost positive there's no carried interest. But that was a good slice of deals that are real companies, venture backed, all have the YC name behind them, which you could participate on WeFunder. So there are things out there for the unaccrediteds who are uncomfortable with clicking the right button, but you just really have to be careful on that.
If there's not a carried interest, how does that affect the investor? So I'm looking at WeFunder or one of these things, and I see something, and you mentioned that there's no carried interest. How does that affect me? How does that affect the company? And why was that important for you to bring up?
So carried interest never affects the company. That's just between the VC or the person who sent you that deal and the investor. It only affects them. It never affects the company. So carried interest is a percentage on the success rate. For everyone watching this has to know what carried interest is. But if you put in $1,000 in a company and it exits for a 10x return at 10,000, okay, your 1,000 comes back first. That 9,000, there's that profit. There's a 20% carried interest in normie VC land on those profits, right? With the regulation crowdfunding platforms, there is no carried interest. They take their percentages up front in cash. They take a percentage from the company. There's all sorts of other fees that really the company absorbs. It's kind of not the best deal for the companies most of the time. Okay. So that if your $1,000 turns into 10,000, you'll get all 10,000. Because they've already taken their money on the front side as far as the platform and stuff goes. So I don't think that those Reg CF platforms can charge carried interest. I'm nearly positive they can't. And I'm in a bunch of those deals too on Republic and Seed Invest and all these things. I love those sites, and every once in a while a really good deal pops up on there.
Yeah. So what does a normal day look like? Because to have invested in 2,200 deals, right? And some of them were follow-ons. Like, that's a lot of correspondence. That's a lot of emails coming in. That's a lot of staying on top of industry and stuff. And you might have exited a few of those or whatever, but like right now, how many active deals are you managing in your brain?
Well, you think about it like this, okay? Like you're paying for an education, all right? Now that's one spreadsheet with 2,200 and some entries on it. Okay. A bunch of them have gone to zero, right? Maybe 30 of them have dissolved. And maybe that's not a complete zero. Maybe you got back 30% of your money or half your money or whatever, but they are no longer active companies, right? And then maybe I've had 50 or so IPOs or exits, right? Those you could deduct. I actually don't have a real number on that, but from an an angel investor that's active in other syndicates who might be putting $1,000 here, $2,500 there, maybe 5K here, 2K there. There really isn't much you can do. You can't really communicate with the company directly unless that syndicate lead and you have a good relationship and he says, hey, Josh is a great guy for this. He's got tons of podcasting experience. He invested in your deal. Why don't you connect with him? I think he can help you. Okay. You can't circumvent that person. Otherwise that founder is going to get 400 emails of whatever, and he's not going to get anything done. So, but you can't actually what can I do? Right. I can read the updates from the founders. Okay. I can track the company. I can archive them. I can save them. Maybe there's an ask in there. Does anyone know anyone who has expertise in Bitcoin or grassroots marketing, or we're looking for a front end developer or whatever? I can look at the hiring, I can look in the ask, and off the top of your head, maybe there's something that does someone have an SEO wizard or whatever, right? And I might be able to help them even with my small check, but there's not really too much I can do. Right. It's not like one of our companies where I'm basically the lead, right, through our syndicate and through our fund. And then maybe we're talking every couple of weeks, you know what I mean? And we're really involved with what that company's doing and vision shaping and fundraising and strategy and other things, right? You're a 2K check in a syndicate. I mean, you get what you get as far as due diligence goes, and you make your decision.
Yeah.
I do get a lot of emails though. I archive most of them, and it's manageable somehow. Somehow I manage.
Yeah. Are you highly organized? Because that sounds like a lot of organization, sounds like a lot of spreadsheets. I'm curious as to how your brain works.
No, I'm not organized. It's a mess up here. No. Look, I've taken a step back from all the angel investing,
Yeah.
from the participating in, 500 different people are sending you deals all day. I'm not doing that right now. So I've completely turned that part of my life off. I'll glance at something if it's a company that I've already invested in and there's a follow-on opportunity. I'll glance at the valuation. All right. I'll check it out. I'll see how they're doing, but I'm not really participating in a lot of that stuff right now because I'm just consumed with what I'm trying to do with Lightning Ventures, So it's less to manage than you think.
Got it. I'm trying to manage me, and I've got 3 kids and wife, and my brain's spinning. You and I had a conversation in the green room prior to recording, and we talked about some tips for founders in terms of engaging with the investors and communications. What is some advice you have for founders who have received money from maybe a syndicate or maybe some investors or a VC group? What's your advice for them? Because you've had a great amount of experience and you've probably seen great and you probably have seen not so great. What does that look like?
My favorite advice and exactly what I would do is to really leverage and involve your investors. Okay, the minute that you take a 25K check or whatever, even a $25,000 check from some notable angel, someone that they are on your team. Okay. And you need to use them and utilize them, not abuse them. Okay. You're not sucking up all their time, but they're there to help you. They're there to contribute. Everybody has a superpower. Everybody has some kind of superpower, okay? And you're the Phil Jackson of the 95 Bulls putting all these people together. So if you take 100K from, a syndicate that's really AI focused, and that's what they do, okay? There might be 32 people that invested in that one deal from that syndicate. You have no idea who those people are, okay? Leverage them with updates, okay? Or the solo VC that invests 250 or 500K, he can probably introduce you to that Series A lead. Okay.
Yeah.
That's not something that really a syndicate is really going to be able to help you with. They're not making Series A introductions. Okay. But as far as hiring, rolling out an affiliate program, a banking relationship in some part of the world, does anyone know anyone here? Those type of asks are crucial. Okay. So sending updates frequently, and asking for something. It could be nothing. It could be, can you like this post on LinkedIn? It could be hop in our beta. It could be download this. Do you want to try our test flight? Send us bug reports. Like it could literally be anything. The companies that come out of YC is so well, like they train these founders so well. Think what you want or say what you want about YC and what's happened. They train the founders so well. I get an update every month, okay, from a YC founder every month. And it can be high level. What's good? What's bad? What do we need? Okay. You got some pluses on the volume and the good here. You got a negative on the CAC cost. Okay. What didn't go well? Oh, we had to let go of this person. Oh, blah, 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 blah. Like it's not all roses. Good, bad. How can you help? And the YC founders come out, they do it every month, and it leads to good. Okay. It leads to good things. And a lot of these founders, as soon as things start hitting the rough patch, they stick their head in the sand. They're gone for 4 or 5 months. You don't hear anything from them. They're not engaging the investors. They're not being forthright on really what's going on. And like, nobody's there to like yell at you. No one's there to, oh my God, you did this and that. Like everyone's just there to help. Like we only want to help, and we can only help when we're like in the fold and we know what's going on. So that's the most important thing. If I was a founder, I would be bugging the heck out of all of anyone that I've taken money from, because they want you to succeed just as bad as you want to succeed.
Were you gonna say shit? You're bugging this.
I was going to. I didn't know if it was allowed.
You're okay. I give you permission. So as a founder, working with investors in the past and then some of the companies, when I have gone through a rough patch, personal, surgery, health issues, family issues, life issues, revenue, whatever the case may be, or I screwed up big time, like my natural tendency is to put my head in the sand, buckle down, fix it, so then I could go back to the investor and go, hey, we ran into a problem, but don't worry, I fixed it, and it's actually better than I started. That's the tendency. However, that's harmful because I believe in smart capital, and the people who have invested with me and who are investing in these businesses, they have money, they have experience, they have network, and they have an invested interest in me succeeding. So I love the thing about like talk frequent, talked often, good, bad, and the ugly, and then what my needs are. There's psychology in making those consistent asks, even if it's just like this post, try this beta. What is that psychology and why is it important?
What is the psychology? I think it's just a habit, like that everyone should get into. Like you're running a company, okay? You're the center of the circle in the company, you and your co-founders, whatever. The exercise of just sitting down on a Sunday night, maybe you have a beer, I don't know, and just free flow consciousness, words on paper. What are we doing right? What happened in the past month, 3 months? Like, what are we nailing? What are we not nailing? And it just gets you into this rhythm of like writing and sort of like a therapeutic kind of exercise, right? And founders get very creative. We have one founder who does a YouTube video. It's not public, it's unlisted, and he takes it down or whatever. But he's comfortable just talking into a camera. He's got his notes there. He's like, here's what's good. Here's what we're doing. That's his preferred method, right? It's not like laying out with bullet points of charts and little emojis of, bullseyes and whatever. It's just like 3 paragraphs from the founder of just like, here's where we're at, and that's cool too. That's their style. But just that therapeutic exercise of getting in the flow, I think it's important, and it's probably, journaling, they say, is important for everyone, right? What's going on in your life that's not business or whatever, just writing stuff down. You got 3 kids and whatever, like you got ups and downs, and that's life. So I just think it's very therapeutic and good for everyone to do.
That's really great, man. Let's role play. you and me, we're hanging out, and you mentioned big city, New York City, and we hop into a yellow taxi, and we're driving around yellow taxi, and maybe Bob Dylan jumps in the car too, and we're driving around. Does and we're having some fun listening to some music, and we start looking at the different buildings, and different stories come up for you. Like what kind of stories come to your mind as we're going through this and hanging out with Bob Dylan? Like, what would you like to chat about?
In New York City?
Yeah.
Really?
Didn't you spend some time in New York City?
Yeah, my soul is still in New York City. Yeah, I actually drove a taxi there briefly. Um, so what I would want to talk about, or what I would want to know, is that I would want to get some stories on what Greenwich Village was like in the 60s, especially that Bob Dylan time. I mean, that was the center of the universe right there for the folk movement and Allen Ginsberg and the Beatniks and Cafe Wha, and everyone who went through there during that like very special period of the 60s. you know I would want to know what it was like. I could only imagine what it was like when you had an open air stock market. The stock market, the New York Stock Exchange used to just trade in person under a buttonwood tree. Just a group of people would just show up there in the morning, and they would just stand outside under this tree, and like they would trade. Like that was the origins of the stock market. So these sort of like historical, the Trinity Church there in Lower Manhattan on Broadway, it belonged to the Queen. At one point in time, it was their property, and it was purchased for like 18 barrels of peppercorns, and like all of these weird things. Like you look at the bill of sale for this giant beautiful church, and it was like 3 barrels of salt, and these kind of ridiculous things. Like those were deals. I mean, the history there is so rich. I'm obsessed with it. Why is it called Wall Street? Why is it called Canal Street? Where did Abraham Lincoln drink a beer? What was the East Village like in the 80s? I mean, just like when it really wasn't that safe, and somebody could easily, stick you up for it, or the 70s when it was Fear City, in those Koch years. If you survived that, we had inflation coming in similar to now. New York's more dangerous now than it certainly was when I first moved there. And we have this kind of rampant inflation coming in. I love New York City. It's my favorite city in the world. Unfortunately, it's ruined for now, but hopefully it will be back and rise from the ashes.
As our team was doing research, and I saw this, I tried to connect it in my question, but you drove a yellow taxi cab for fun in New York City. Like that was
That's
fun for
correct.
you, and you would drive people around, and you would tell them the stories of the buildings, like you did too. What is one of your favorite moments? Like, first of all, why were you doing that for fun? I could think of a thousand other things for fun. Like, why did you choose that? And what was your favorite memory doing that?
Well, first off, when you go to New York City for the first time, it seems very big. It's very overwhelming. And it seems like this massive, massive place, right? But it's not. It's actually a very small island. At its widest point is about 2.5 miles wide, and it's about 13 miles from southern tip to the northern tip. So it's actually a very small island. I mean, many times I've done a bicycle ride around the whole thing. But when you're there, it feels huge. So for me, it kills me not knowing everything. Okay. And the easiest way to do that was to get a license to drive a taxi, because the schooling that they put you through to drive a taxi in New York City is actually more difficult than a real estate license. It's more difficult than an insurance. It's more difficult than many other things that I've gotten through my life. Getting a taxi license there is hard. Okay. Well, at what point in time is Third Avenue, turn in? It's just like, when does Amsterdam turn into 10th Avenue? Why is it, where's Jacob Riis Park in Queens? And it's all over the five boroughs of like stuff you need to learn. So going through that whole process of learning New York City, getting the geography down, learning a lot of the cultural points of interest that I ended up going to, right? Because when you move there in your early 20s, life is about adventure. So that's it. What is an adventure that I can have? I can sleep on my friend's floor. I can drive a taxi. I can have a bit of this lunatic lifestyle. And I did that, and it was super helpful, right? Because that got me into real estate afterwards, because now I knew the neighborhood, but I didn't do it for very much. And I tried to point out some interesting parts of the city to people who were in my cab. But what I found is New Yorkers did not care and did not want to talk to me. Okay. They didn't care when the Brooklyn Bridge was finished. They don't care if it's the longest suspension bridge in the world. They don't care about any of that stuff. Okay. They really just wanted to get where they're going and shut the hell up. But some people did care about it, and it was a lot of fun. And I love all that stuff. I can never get enough of it. I wish I had more time to just continue to do it. There's so many good secrets of buildings and things in New York. It's a great place.
Yeah, that's super cool, man. As I was reading your story, I was like, that's pretty cool. And I wanted to hear the motive behind it. And it completely makes sense. The best way to learn a city is by driving it. And why not, if you're going to be driving it, why not get paid to drive it, right? So I think it's brilliant. You, in your early years, you got into real estate, you made some investments, but which eventually led to 2,200 investments, which is a pretty cool path. But in the path of that, you did music, right? You were involved in music, and you landed a decent sized record label, and you were involved in that kind of world too. You've got a breadth of experience. What did you learn from the music industry that makes you a good VC?
So I was in music for like 10 or so plus years. Started in high school, had a little record label, fell into promoting concerts and booking talent and learning that side of the business, which then led to other stuff, right? Booking tours for bands, tour managing bands, managed a band on Electra, like you said, spent a lot of time in music. And the one comparison that I think is most applicable for venture is really the record label and VC brand comparison. Okay. Because, if you remember, sort of not necessarily pre-internet, but pre-internet that we know today, how did you find out about bands? I mean, we listened to punk rock music or ska music or whatever was big at the time, right? In the 90s. It really wasn't coming from a streaming suggestion, Pandora playlist. Like, you went to your favorite record label, you watched, Lookout Records or Vagrant Records or whatever, and they signed bands. And when they signed bands, those were typically very like bands that you would like. Right. So you kept an eye on the label, and that's kind of how you found out about new music. Right. In the VC world, VCs are investing in companies. Right. So we're kind of acting as this sort of label. Right. So if a company comes to us and we invest through our fund or we run a syndicate, it has that flavor. You know what I mean? It has that flavor of a company, right? As opposed to the things who go to a lot of the other companies, right? So I kind of look at ourselves with Lightning Ventures as like, we're like the indie label, we're the scrappy indie label, and we want to maintain those relationships as long as we can and support those companies. But the big VCs, just like the big record labels at the time, David Geffen, MCA, all that stuff. If you were a cool indie label, you signed a deal with them, you continued to do what you wanted to do. But then at any point in time, MCA says, we're uplifting that band. Oh, Blink-182, we're uplifting them. Oh, whatever, we're uplifting them. They're now ours. And now they're on Warner or whatever the big label is, right? So they kind of work those deals. So I think that we're kind of at ground zero as far as the misfit investors out there doing our thing. But that's the one comparison that I think. And one other thing, in terms of concert promoting, we did 35 concerts a month in Phoenix, Tucson, and Albuquerque. Okay, that's a lot of shows. We were one of the largest independent promoters in the Southwest. When you book a band and there's 50 people there, and you establish that relationship, okay, you are maintaining that relationship as long as you possibly can. And when that band comes back and there's 150 people there and it's at a slightly larger room, and you maintain that relationship with all parties, that band has a manager, that band has a booking agent, you also know the band, right? So when they start screwing around, you can go right to the band and be like, hey, your people are giving me the runaround, and that's a good way to fix that sort of thing. So there's 150 people, and then there's 400 people, and then there's 800 people, 1,200 people, 2,000 people, 3,000, and then you get to that 5,000 level, and you kind of are done. You have Live Nation, Clear Channel, all these big people. They are going to take that. Maybe they throw you a bone, whatever, but there's only so far you can do, because you're not doing an arena show as an independent promoter. It's just not happening. Okay. So when you're a VC, or when you're an active VC, right? Because there's proactive and reactive. A reactive VC waits. Hey, can you give me an intro to this guy? I see you're connected. Sure, I can do that. That's a reactive VC. Happy to do that. Okay. And then there's a proactive VC, which is like, hey, you know what? I know this guy. Do you want an intro to him? Right? Two different ways to go about it. So when you make that investment in a company, you want to see them succeed. We're not just, and some people it's okay. Cut $100K check, you do it. And that's fine too. Right? Because everyone needs capital, and they're still providing something that's valuable, right? Which is money. All right. But we want to maintain that relationships. I don't care if we have pro rata rights or not, because if I'm doing my job and that founder and I are tight, okay, I'm always going to get an opportunity to invest in the next round. You know what I mean? I personally don't care. And, people get hung up on like that stuff with I don't have pro rata. It's like, no, if we're doing our job, we're in,
Yeah. The job doesn't end once the check is written. That's when the job really begins, for a proactive VC. Man, Mike, so many more questions to ask you. Two more questions because I got to get going. Question number one, where could people go to connect with you and do a deal?
Okay, well, with Lightning Ventures, we're just investing in Bitcoin companies. So that limits a lot of stuff. Okay, if you're a founder, if you're working with Bitcoin, you can go to ltng.ventures. Okay, and you can fill out something, or you can hop in our Telegram channel or post whatever you want in there, and we'll see what happens if you're a founder. If you're an investor and you want to invest in the most exciting thing in the world, which happens to be Bitcoin and Bitcoin startups, you can get the same information on our website. It's ltng.ventures. You can fill out a little LP application there. We can send you a custom invite so you can start getting in our fold. It's also great for networking. It's great for other things, right? There's a lot of great attorneys in there who end up with great clients and relationships that come out of just being in the fold, right? It's not about just specifically investing. My job is to get the most accomplished group of badass all-stars, okay, in the network, so that when somebody needs something, there's someone there for that. So that's ltng.ventures. I'm on Twitter. It's Mike Jarmuz, my name, MikeJarmuz. And that's pretty much it.
Cool. What question should I have asked you during this interview? I know we were all over the place, but there's probably a question that I completely screwed up and missed that I should have asked you.
Are you out of your mind?
Are you out of your freaking mind?
And I may be. Look, it's interesting to see what's going to happen with a lot of these companies. So if you go out and you make 10 investments for 1K a pop, okay, and you follow them, there are so many different outcomes. And I've had Harvard graduates tell me that my experience doing these small checks and reading is worth more than what they got. I find that hard to believe, but this has been told to me by multiple people, because what happens? They're acquired. It's half stock, it's half cash, it's a SPAC, it's a direct listing. There's lockup periods. They're extending the periods. They're reducing the periods. There's all these kind of things that happen once you invest, right? There's a BlockFi, there's scams, there's things that go to zero. There's things that get wiped. There's so many different things and outcomes that can happen, and you really learn by experience. and just getting out there and making a few investments and seeing what happens. I mean, if you made investments during the bubble, during the peak, when everything was great, let's see what happens. Has the reckoning come? A lot of people are saying it hasn't happened yet. Companies that raised at high valuations a year and a half ago, and they're quiet, if they fail to grow into that valuation, they are done. Okay. Every founder wants to raise at the highest valuation possible. Oh my God, I want the most for my company, and I want to sell the least. Well, guess what? That's a great way for your company to just end badly. Okay. Because you ultimately have to stand on that, and it's something that they're often not thinking about. I'm just totally rambling here. I apologize, Josh, but thanks for putting up with me. Maybe you can cut it on the backside or something.
No, we're gonna let it roll because there's good stuff that you're sharing on, and I'm taking a lot of notes. But I think that there'll be follow-on conversations with you and I. But for the people in the audience, I hope you've enjoyed this as much as I have. As always, reach out to our guests and say thanks for being on their show. Their contact information will be in the little show notes below, so you can connect directly to them, follow their work. And if you have a deal that you'd like to talk about here on the show, or maybe educate our community about, we're currently looking for people who could talk about term sheets and all the details. What is a safe note? What is this and that? If that is you, head on over to thedealscout.com, fill out a quick form, and we'll get you on the show next. Till then, we will talk to you all on the next episode. Bye, everybody.